Well, the market posted a strong session as fundamentals continue to prove that early enthusiasm about the economy and the stock market this year wasn't misplaced. Yet there are several surveys showing confidence in the stock market continues to plunge. Now, I've been fighting hard to underscore the reasons to believe in this economy and the reason to be an investor, but a number of factors from political hijinks in Washington, D.C., growing debt, and of course, anxiety over interest rate policies have taken a toll. But the biggest problem is lower sentiment simply triggering even deeper declines in sentiment. It's sort of a snowball kind of thing. You couple that with these wild gyrations and sessions with monumental point declines. Well, as for active investors, I continue to say the bigger problem is indifference. The number of investors calling themselves neutral is huge. Now, history has shown over and over again that the number should be the exact opposite in this poll. In other words, the bullishness should actually be surging as the market drops. That's when opportunities develop. Now, today we saw shares of Facebook really do amazing, powered by an amazing earnings result and confident guidance. The company must continue to grapple with the notion of tweaks to its business model. We know that's going to happen. Higher taxes, maybe fees in some of these countries around the world. But as management stays committed to its advertising model, the question has been, will the public flee out of privacy concerns? Well, we've got a new Fox News poll that suggests this could be a problem, at least according to the poll. Here's one question. If you care if Facebook shares your information with others? Yeah, 73% of people say, yeah, I do care about that. And then there was another question that said, so have you considered deleting your Facebook account to protect your privacy? 43% saying yes, 54% saying no. And then there's this sort of favorable, unfavorable question here. Facebook, the company, 48% favorable, 41% unfavorable. But look at Mark Zuckerberg, only 37% favorable, 45% unfavorable. That last question may provide an explanation why Shakespeare answered the question about user outrage over privacy. Methinks thou dost protest too much. People seem to view Mark Zuckerberg and not the company as a problem. As for the current business trends in America, while peaking and with respect to user growth, they're only up 1.6% in this quarter that came out in America, right? But think about it. Asia was up 24%, and the rest of the world also enjoyed double-digit growth. That's why the stock continues to grow. By the way, after the close, a couple of earnings reports. I already talked about Amazon crushing it again. Revenues $51 billion, earnings $3.27. 157% better than Wall Street expected. Operating income almost doubled what Wall Street was expecting. And of course, there's always the cloud, the AWS business, $5.44 billion, $1.4 billion in operating income. Intel, by the way, also beat on revenue and posted earnings of 87 cents, 15 cents more than expected. That stock is up. Microsoft beat. It might need another masterful conference call, though. The shares were slightly under pressure. Let's talk about a technical view of this market. So will these results that we're seeing tonight be enough to reverse this trend of lower highs that I've been showing you? A great session thus far, and it picked it up from yesterday where the Dow Jones Industrial Average climbed up 200 points from the decline. So here's your key test for tomorrow on the Dow. 24,321 in the big breakout. If we get through 24,544 on a closing basis, I hope you start to make some selections.